friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the market during the day and how we can plan for a better trade plan for the next day. So this is analysis for March 9th, Wednesday 2022. Right. To summarize what kind of day we had today, it was a relief rally. Markets went down and then made a bit of recovery. Banks did not participate that much. So whether do we have the downside more left? No, we'll analyze and come to a conclusion. The pre-market analysis is what we are going to do based on all the parameters that you see on the left side. We'll be looking at the charts and then we'll have additional analysis on data analysis on all these additional parameters that you see on the right side. We'll wrap up some actionables as well. So here you have an engulfing candle. Candle is completely engulfing the previous candle, so that's bullish in nature, wide range bullish. But remember, there is a gap here and another gap on the upside, so two major gaps are there upside. And also here also you see some recovery, but that recovery has not materialized to close above the previous day's high, and it also made a dip and new swing low. Here also you have Nifty also you have a new swing low, Bank Nifty also you have its new swing low created, and then a recovery attempt had. But there are multiple gaps up there as a resistance. So overall you can see that it's a downtrending price action overall. It's in a trend line channel, right? That is trending downside. And there is M pattern that is getting formed on the weekly basis on the Nifty and the Bank Nifty, and we are almost at the neckline of that. So the next levels to watch out would be 32,000, then 30,000 nearby, and then that's on the Bank Nifty, and Nifty to be 15,400. It's very crucial whether it will hold on to that range or not, right? So it was 150 point or nearly 1% of recovery is what happened. Wide range candle, engulfing candle, bullish in nature, and it attempted to break the gap resistance and it got stuck there. It's still not broken, and new swing was created. We've seen all this. It's in a downward trend channel. Fibonacci 61 is a major support zone where it is broken. The M pattern is there where the neckline point, and next level to about 15,400. Bank Nifty is nearly 1% lost, but 1% recovery happened, but that's nothing. 287 points is nothing compared to the 1,600 points of fall that happened the previous day. Big falls and very small recovery. Bank Nifty shows still weakness, but it's a wide bullish candle that happened today. New swing was created and it could not close above the previous day's high. Right, and trend line channel downside price action is what you see, and double top pattern is still visible on the weekly. Fibonacci 61 support has reached 30,000. We saw this on the chart when I was explaining. I'm just repeating it once. Nifty basically price action was kind of volatile. It trended down to lose 1.2% and then recovered from there 2.2%. Similarly, Bank Nifty 2.2% down and then 3.2% of recovery. So that's kind of V-shape move happened today also. So that's the volatility at these levels. Some Fyers sell and DAs buy. That's probably what happens in every every dip gets bought by DIs, and heavy selling continues by the Fyers. So this is the price action. You can see that it went down and attempted a small recovery in between, 0.5%, and then completely went down and then fully recovered after 130. Same thing, went down, trended in morning and then fully recovered. V shape. Bullish bands breaking down, highly volatile because the bands are expanding both sides. Price action downside, breakdown, downside, breakdown. Bearish indication on Nifty and Bank Nifty both. Support resistances. At a gap resistance zone right now. So 15,850, 5950, Fibonacci 61 is what it is trying to retain. So that's kind of a resistance only, although it is clear that. The sustain above 16,200 is what we have to see. Then it can be seen as some kind of internal trend to move up. You can see that. Then above that you have 16,380, 16,450, Fibonacci 50 retracements. Then above that 16,550, 650, then 16,700, 750, 16,800, 16,900, which is Fibonacci 38. And above that 17,000, which where then the second gap is getting closed. Right? If it already moves above that, you can say that there is some recovery really happening above 70,000. And Nifty similarly on the right side, you can see that it supports on 32,400 to 32,800, that's all. Below that now you have 32,000 zone, and then below that you have 30,500 to 31,000, that zone, right? These are all support zones. And similarly we have resistance on the upside, which is coming in the 34,000 Fibonacci 61 retracement, whether it will carry capture the 61 retracement level is not, but there is a gap resistance up there, right? So resistance above that, so the entire zone gap resistance is very strong resistance. That's why it's given as a separate box. Resistance 34 750 350 to 750 is resistance upside. Then above that 35,000 would be a Fibonacci 50 good resistance on the Bank Nifty. Then above that you have 35 600 to 35 900, so near to 36,000 zone is also good resistance. Then 36 800 Fibonacci 38 would be a resistance on upside. So a lot of resistance is upside. Downside, remember that there is the neckline point of a major support area, both in the indices, right? This zone where it is right now, it's a major support zone, right? Bank Nifty can further go on another 200 300 points to reach 15,400, and below that it could be major fall. And the Bank Nifty is like 30,000 would be the end point. Below that it would be dangerous. Already a good amount of correction, more than 16, near to 16% of correction, and 22% of correction Bank Nifty has happened, right? So you never know what happens, right? That's a reasonable correction that has happened. So whether it will further correct to from 20 to 30% kind of, or 30 to 40 50, it all depends on how the uncertainty of the war and the global crisis that's happening right now. It all depends on that. Nobody can predict what happens. Momentum is the next thing that we have to see. The price momentum, if you see, it is in bearish zones on both the indices in short term, and the median also is bearish. Now there was a bullish divergence that was in the Nifty, and it seems to have worked out. You can see that the momentum has confirmed the divergence, and if it is not met the target, so still it's work in progress. And if that momentum is to meet the target, then it can go and hit 16,750 at least, which is the second gap starting zone. That much of movement is the price is the target for this momentum diversion. Momentum bullish reverse momentum bullish divergence if it works out, right? And if there is no divergence, it's bearish momentum symbol, right? So momentum is clearly bearish on both, with some hope of a pullback in the Nifty. Trend is bearish and with rising strength and Demat negative in both indices. Volatility, both the indices in short term and medium term both. Volatility, if you look at India VIX, cooled off a little bit 2.5% and then settled at 28.59%. 28.89 is implied volatility. Implied volatility is at the peak of 99.6, and India VIX above 28, you have to be extremely cautious and careful. It's a fear and greed indicator, and due to the ongoing global crisis of the war and inflation and all that, crude oil surging and all that, the fear and factor is high. That is why we are seeing we have spiked up from the 15 levels to the 28, 29, 30 kind of new range. That is where it is hovering around. Right? When it will mean reward board and downside and begin the downside move, we never know. Right? So open interest data analysis, if you see, you can see that some overall no clarity has come. Tomorrow is Wednesday. Day after tomorrow is expiry for the weekly, March 10th expiry. And the range is 22,000 point range of 15,000 to 17,000 is where the highest put and call rating is. After 15,500 to 16,500. Nifty 0.52 is very close to the bearish zones. Long build up is what happened today on the openness build up. Bank Nifty 32,000 and 36,000, that's a 4,000 point range that is there, where the market participants have sold most put and most calls respectively, which may act as support and resistance level. 31,000 and 35,000 also got the second level of support and resistances. 0.51 is very close to the bearishness put call ratio, and long build up is what you want to see in the price action. The futures open interest rate build up that happened today, right? So that's open interest analysis. It's giving a very wide range because of the VIX levels, but you have 2 more days to go. Cool. Yeah, relate these levels with the matching with any levels that we had seen. The upside 7,000 is matching. 15,500, the second support level highest, is also matching with what we are talking about, 15,400. But yeah, no. So heat map is showing that Reliance shown some big weakness, and the major indices, IT sector and banks, overall across sectors good moves have happened, except the metals didn't do well for some reason. Metals are doing good and it was breaking out, but there seems to be a pause there in metals. But otherwise, sectoral performance is showing that all green, except metals and textiles, right? So that's the heat map in sector. So now index trade, if you see, had a major support zone showing some green in HDFC Bank. HDFC is also showing some green, but remember that it is broken off from the major support zone and trying to climb back and well within a downtrending channel. Lines show some weakness, but closed green in the channel, sideways momentum. Right? Remember HDFC and HDFC Bank are not in sideways momentum, bearish momentum sell. IT stocks TCS and Infosys both did well today. Green closes. Momentum is still sideways, trying to move up. TCS within the channel. Info is showing some kind of consolidation breakout. Now to check whether this will sustain or not. Banking again, ICICI Bank is trying to take some support at the it's showing some green after breaking down from the major ascending triangle breakout zone, which is acting as support. It has not respected that. Now we have a gap here. So only if that gap is broken, can it move back? Momentum is still bearish. So ICICI Bank bearish, HDFC Bank bearish momentum. Although some green is seen in all the stocks today. Kodak Bank also showing some green at a major support zone. Hopefully it will hold the support. This is the major support zone which is respected multiple times earlier, but sideways is not the momentum, it's bearishness still. All bank stocks in the heavyweights are showing bearish momentum, but some green ticks. And Reliance, the Infosys and TCS, IT stocks are performing good because of the dollar move, probably. So sector-wise performance, if you see, IT moved up to 0.6%, but still in the sideways zone. So you'll have to wait. Metal close red, right? So stocks which are performing, it was metal. For some reason, this 0.1% metal is up today. Just quickly verifying, probably a mistake on quick verification. Yeah, metal was red. There is a mistake. It is close red. It is 1.5% down. The up is a mistake, right? Close red, metal close red. IT moved up, and rest is all green. Auto, pharma, FMCG, reality, all close, 1%, 2%, 1%, 3.25% reality, all moved up, but moment is still remaining in bearishness. So where the moment is not bearish is metal and IT, but metal did not perform today, but the momentum remains sideways. IT is heading towards bullishness, but momentum as of now is sideways. So we'll just have to wait for it to go into the bullish ones, at least on the short term. Institutional participation is very bad. You can see that 7,500 kind of selling happened yesterday and day before yesterday and previous to that also. So just in 4 days, 26,000 crores of cash selling has happened from the Fyers. 18,000 crores of buying happened from the DIs, but not catched up. Today's it will not come, but we'll quickly check whether the data has come. Yes, today it has come. So 8,000 crores of selling has happened from the FIS today, and 6,500 crores of buying has happened from the DIS. So heavy selling and heavy buying. So now the DIS seems to be buying as much, trying to buy the maximum to catch up with the FIS. But look at this, 8,000 crores in one single day. So 34,000 crores of selling just 5 days of trading. 5 days of trading in March month. Just 8 days are over. March 8th is only over, and we have closing towards 50,000 crores of selling. That is the kind of selling that is happening in the markets, right? So this is continuing as ever. So USD INR is also all-time high, historic high of $1 is equal to 77 rupees kind of. So today some industry small body candle has happened, but still historic high No, 77 rupees has to be paid for getting one call. It's COVID one way level is already breached. You never know when it is going to stay there. But there is some intervention that may be happening from the central bank. That may be the reason why it is trying to stay there, right? But that does not mean that it will never go to 80, or it can. It can go to any level. There is a limitation to the RBI pumping the money to that. But as of now, it's peak high level. But normally, if you're doing any trading on these currencies, probably this may be there could be opportunity to for shorting also, no, where it could cool off after a while, right? Because some interventions may happen to make sure that it does not breach go too much from here. So yeah, so there is an option, shorting opportunity that may come in the currency trading, but as such, rupee is weakening basically whenever market is at this peak level. That is not good for the markets also, right? So dollar index is showing that it has taken a red today, and there is resistance immediately above at 98. But momentum is crazy and it's heading higher and higher. But as today, a slight cool off can be seen on the currency. The crude oil is cooled off slightly, right? But it has gone beyond all imaginable levels, and then right, it is again trying to spike and go to the 120 kind of levels, right? Not good. No, dollar price shooting up and in crude oil shooting up both. No economy can withstand that for a while. But same time, gold is breaking out, indicating that the stock market is heading towards a major correction. So it's spiking out and just broken out from the 1917 supports resistance level, breached the 2000 level. Now it's heading to 22,076 is the major resistance in the upside. So if that is broken, then it would make a new all-time high levels to the gold. Founder super. So it is a breakout of a cup and handle pattern which is consolidated with 2 years in the handle side. So this may be best time for investing in gold as a hedge against your long-term stock market investments. And Dow Jones, you can see that the major support zone is breached, right? Clearly breached with a red close below that support zone. So now next support is in 32,000 levels. So this is worrisome, and market is not holding up in the US. There was some hope till yesterday, but today it is clear indication that US markets are trying to crack. Right. Nasdaq has got some support downside, although the trend line gets breached every day. Major support on the top is also breached. Same with the case of S&P 500 also. The major support is breached and it is trying to climb back. Trend line keeps getting broken, and so basically the major support that was holding the market for the last several months is now no longer there in the US market, right? Which is adding up to the worry. Two actionable infos can be a long trade, but only and only if the momentum stays above RSI 60 confirm. Because the volumes are good, momentum is trending up, trend is getting to bullish, and this is a daily candle. The entry can be if there is a up move above the previous candle's high. That will be alert. And tight stop loss is good because overall market business is there. Only IT is performing a little bit. So Whirlpool of India is a short opportunity. There is some kind of daily, head and shoulder pattern which is seen to be breaking down. It has slipped off from the neckline, so it could give some downside moves, and momentum is clearly showing it is bearish, and trend is also bearish, and volumes are also above. So this could give a good short side trade on the downside. So one long and one short in versus and Whirlpool. Wrap up bearish short term is market. We just can't help but being bearish because charts are speaking to you. Support resistance level is speaking to you. Bearish momentum is there. Bearish trend is there. Bollinger Band breaking out. Major support levels broken. Fibonacci levels broken. Heavy selling pressures. Banks continue show the weakness. And two big window gap resistances right above. Double top formation. Trend line sliding down. So the n number of reasons that which says FIs are selling continuously, rising crude and rising dollar. All there is Everything is clearly bearish. We just can't help but being bearish. So until there is a green above green close above the 17,000, markets remain bearish in nature. War and B stocks continue with floating around. So market extreme volatility there. Anyway, it's about crazy 28 levels. So you have to be very cautious. And especially when you're doing derivative and options in short-term trading, it'll be very cautious. So Fyers are selling, so that's the biggest concern. Nothing can be done. Positive factors, nothing much is seen positive as long as the global uncertainty on the war and the oil crude price surge and inflation, all that is cooled off. Until then, there is nothing much positive seen as such. Stay away from the market if possible, especially if you are trading in the derivative section, unless you have expertise in that, right? So weeks cools off below 20, then again back. So always, if you are forced to take trades, then in the options, always hedge your portfolio. If you can hedge it with gold positions in the derivatives and options, you can hedge it using option strategies, right? So always, this may be the time to pick up some stocks and quality stocks in the SIP mode. This is something that I repeat, always use hedge positions if you are carrying overnight and tight stop losses intraday. Intraday is very tough to catch the trend because of the V-shaped move. So this is something I repeat, there is not much change. Overall, the view is bearish, and then if that helps you to frame your own view and your own trade plan for the next step, consider the like button. We have very few subscriptions, so your help in this regard will be highly motivating. Thanks, happy trading, happy learning. Bye.